little bit like,
Hello,
for me, like
it's Adil,
the
Mr.
Olympics.
Intermarket
And
Analysis.
so you hope to be best prepared and to just go for it. If you're
my CNBC. Okay, here we go. So, okay then. So basically, what do I expect, or what do we expect to happen here? Okay, going into the tapering on, tapering off, wax on, wax off, risk on, risk off. Okay, that's what this whole market is about. Okay. Right, let's have a look at the fundamentals first, and then we can go on to the technicals afterwards, and then I'll try and give an insight as to what I think will happen. Okay, basically fundamentals thus far, sterling has gone through the roof. Why? Because of the jobless data that came out today. Obviously unemployment rates falling. Obviously that caused the shorts to get pounded today. Given the fact that inflation data yesterday came out lower than expected, which means that interest rates will be kept low. Okay, therefore the single concern that causes that has been causing the FTSE to lag all global markets has been higher interest rates, given the fact that the QE is over. Okay, and obviously Mr. Carney did state that to a certain extent yesterday. So first of all, inflation data came out because the whole concept, this whole game is about Euro GBP. Okay, the FTSE. If you want to trade the FTSE, watch the Euro GBP. Okay, and something that Mr. Carney touched upon yesterday as well. So quick recap. Yesterday, inflation lower than expected equals lower interest rates equals FTSE higher, and that obviously sent Euro GBP higher. Hence the reason why FTSE was higher. Okay, I went long overnight, managed to nail plus 20 odd on the FTSE, plus 40 odd on the DAX. So it was a good day, awesome day, awesome week so far. Monday had a very bad day, obviously given the fact that China throwing through in the curveball, etc, etc. Very bad day on a Monday, but managed to recover on a Tuesday, and now I'm plus 90 points for the week, so that's good news. Okay, and I managed to nail plus 90 points in the fundamental analysis service as well, so almost 180 odd points for the week so far, and it's only Wednesday, so life is good. Okay, now with regards to obviously trading, you're more than welcome to come and join me in the live analysis service. The fundamental analysis service is for free. I charge £50 a month for the live analysis service, and you're more than welcome to get access to my trades and analysis, etc, etc, in real time. And you can do that by going to my website. Just a quick little reminder there, folks. Go to my website, click on live analysis service, and you'll certainly see the details of the video there of basically how I trade the live analysis service. Also, with regards to fundamental analysis, there's details there as well. So, for those of you that are interested, I post my obviously free trades for the next month or two, giving you live trades, etc, etc, on there. Okay, the active trade at present now is currently Barclays long, looking for £3 on that. Okay, so certainly that trade's certainly active. Okay, so okay then, so that's basically the summation for yesterday. So obviously all the shorts piled into sterling, caused sterling to fall. Obviously sterling took a bit of a hammering, and obviously went south. Okay, and the fact that Euro GBP obviously was rising, that obviously means that more exports to the Eurozone, and obviously that caused the actual markets to, or the FTSE itself, to rise. Now obviously that's been reversed today. Why has it been reversed today? Because jobless rate, unemployment rate came out much better than expected, and obviously that caused everybody to anticipate that the interest rates will start to rise. And given the fact that Mr. Carney did say that monetary QE will come to an end, okay, he can't justify any more QE. He stated that the UK can be without QE. He's weaning the market off QE, which is a sensible thing. You know, you have to give him props for that. Okay, you have to respect him for that. Okay, or muchos respetos, as they say, and give him his props, because that's something that the Fed, which is a coward, can't do. Although the Fed will be following in his footsteps today. Okay. Because I do expect a mini taper. Okay, so that's the situation there. Obviously, that's caused this for Euro GBP to come under pressure, falling, and hence the reason why the FTSE has been under pressure and has failed to move higher. Okay, so basically the summary is that higher interest rates. Okay, higher interest rates means that the FTSE will continue to lag all global indices, given the fact that it's weaning itself of the QE shenanigans and stupidity from my perspective. We certainly need to drain the morphine, or take the market off the morphine drip. Okay, so obviously a higher sterling is not good for exports, and that obviously doesn't bode well for the FTSE. So let's go to the FTSE chart now. Okay, FTSE chart, okay, if we look at it on a weekly basis, let's just have a quick look on a weekly, see if we can spot anything there. Weekly chart, obviously it does look as if it's into support, but it's an inside bar. We're creating a head and shoulders formation, and down we go. Okay, so left shoulder here. We've got a head that's already been put in. Now we've got inside bar consolidation. Boom, down we go to 6150. That's basically the pattern, the way in which it's going, especially given the fact that sterling's starting to rise, given the fact that high unemployment rate is dropping, etc., etc. And boom, down we go. Okay, so that's H&S formation, double top, lower high, down. Okay, so you're definitely looking at 6100. That's definitely the way the market's going into next year. Okay, so Santa Claus basically is on vacation this year. I don't think he'll be arriving. Okay, so unless like I said, the curveball is if they do no taper, and then obviously the whole situation changes. So I'm not going to take one bias. I'll be more than happy if I'm wrong. I have certain trades at present. I've got a Nasdaq trade and a FTSE trade. Obviously, if I'm wrong, then I'm happy to change my bias, and that's what trading is, folks. Okay, so daily chart here. Okay, daily chart. Okay, we had a bullish engulfing candle. We've consolidated within. The reason why I'm bearish today, and given the fact that I expect this market to go lower, is that German DAX rallied. CAC has rallied to a certain extent. Euro stocks has rallied, but the FTSE's failed. The FTSE's failed even to the point where I expected this type of pattern to occur going into tapering. Okay, I expected boom, boom. Okay, so I expected a minimum of 6560, and yet the FTSE is holding the 200 MA as resistance and failing to even rise above. It's even failed to take out yesterday's high, really, and given the fact that and also you have to bear in mind is that the biggest clue that you have right now is that Shanghai has been negative all week. The Nasdaq has been negative all week. That's not a good sign. Okay, that's a bearish signal. So you have to bear that in mind as well. So you're looking at those two factors as well. So when when your key leaders, your chiefs, I like to call them when I teach in the mentoring program, when your chiefs are lagging, then that's a warning shot. A warning shot for everyone. Okay, so basically, yeah, I didn't expect this bull flag to play out. Obviously, that's a possibility given the fact that if there's no taper, then boom, up we go. If there's a mini taper, then boom, down we go. And this channel, this will get negated, and we go down and break this trend line. And lower lows, lower highs continue. Okay, so let's have a look at the 10-minute chart now. So FTSE. Oh, actually, let's start with a 60-minute chart. So basically, what do we have here? Okay, so you had lower lows, lower highs. The market's putting a higher low here. It's held a 50 to 38%. That's hence the reason why I was going long today. Or overnight, should I say, and obviously I nailed it on the upside. We went as high as 6530 today, so it's not bad. Okay, so we haven't played the IHS. Okay, yes, you can argue that yes, okay, if there's no tapering, the IHS that will be the catalyst for the IHS to play out, and we go to 6580. Obviously, we go higher potentially and close the gap at 6600. Yes, I agree. I totally agree. Okay, I'm not going to argue against that one. But do we get tapering? Yes, we do. Okay, that's basically my conclusion. You are going to get mini tapering. Okay, also the conclusion of Kathy Lien and a few other fundamental analysts, well-respected fundamental analysts that I follow. Okay, you will get some mini tapering. Okay, and 5-10 billion, and obviously that will be attached with the no forward guidance at present. Obviously, you'll leave that to Yellen, allow her to dictate. Okay, so. But yes, keep an eye on that. Okay, so inverted head and shoulders. Like I said, if there's no tapering, expect or whack a rally higher to 6600, gut fill. With mini tapering, then expect the markets to potentially test the lows. And yeah, and to a certain extent, mini tapering is obviously it has been factored into the market to a large extent. Okay, but there will always be a knee-jerk reaction. And then, but having said that, you can't even discount something more even aggressive than that as well. Given the fact that I already stated on Twitter, US growth tick, US employment tick, okay, and inflation data started to rise yesterday. And given the fact that commodities have come off their lows as well, and are starting to look bullish, then forward expectations, etc. Definitely, and obviously growth is starting to accelerate. Growth generally means that. And that's just not just in the UK. That's not just US. It's in Eurozone. It's in UK. Okay, so and even China to a large extent, the growth is still. It's not falling off, etc. It's still there. So obviously, given the fact that tapering is there, the QE junkies will go cold turkey. The initial reaction will be sell the and sell the rips, and everybody will want to jump out at once, and that creates a massive sell vacuum. Obviously, I'll assess how much that sell vacuum will be, and then I'll just react accordingly. I always follow my intermarket analysis variables. If there's no mini tapering and the market goes down 10-20 points and there's no reaction at all on the sell side, and that tells me that the market's tapered, well, basically has already factored that in. If that's the case, then I'll switch my bias and I'll go long. That's basically how I trade, okay? And that's how any professional trades. You don't dictate to the market. I can't dictate to the market and say, yes, this is going to happen, okay? All I can say is these are the possibilities and probabilities of what's going to happen. Just like a chess game. When you play chess, when you're playing chess against your opponent, you're looking at all the potential outcomes or moves your opponent could make. And then you can, you have to organize and formalize some sort of counter movements in order to be aggressive, whether you want to have an aggressive strategy, have a defensive strategy, etc., etc. And you just react accordingly. So each move he makes, you have multiple other moves that you can make and he can make against you. So every time that piece is moved on the board, the whole game changes. Same thing with the intermarket analysis in the stock market. Every time a variable moves, the game changes. So for example, if the euro starts to spike higher, the game changes. If the Aussie starts to spike, game changes. Euro JPY starts to move, game changes. Oil starts to move, game changes. FTSE starts to move in any particular direction, and Nasdaq and the CAC and the DAX are lagging, game changes. So the game is constantly changing and evolving. And because it's basically buyers and sellers, and they're showing their hand, and you have to read that hand, okay? And then you'll be able to obviously forecast the market. So on Monday I didn't read the hand properly. The market just went vertical move. Look at this. Look at this move on Monday. Boom. Not a single bar consolidation or red bar pullback. Just constant move higher. As a day trader, you can't trade that. As an investor, you can trade it, yes. But as a day trader, you rely on support and resistance to be held, and obviously you adjust yourself accordingly. When every support and resistance, I mean, even gap fill got ripped apart. You had horizontal resistance, but previous support equals resistance ripped apart. You had your Fibonacci retracements all ripped apart. You had your trend lines ripped apart. So as an individual, there's only so much you can do, okay? And we rely on support and resistance. And if that's not your day, the market wants to be irrational and illogical and etc., so be it. You have your stop losses in place. You live to fight another day. You don't bet the whole house on one trade, and obviously everything goes astray and over leverage and so on and so forth. So maintain discipline, good money management, good risk management. Keep your composure. Keep positive frame of mind by obviously having positive people around you. Have tunnel vision. Okay, so these are all things and attributes of a successful day trader. Okay, but again, they can be taught to a certain extent in the mentoring, but the real way of teaching anybody, and this is why I obviously started the live analysis service, is to learn in real time. There's no better way than learning in real time. It's like an apprenticeship, folks. You have an apprenticeship, you learn. You can go and do a degree and learn the theory, and then when you come to a real life, you don't know how to interpret and apply that information and knowledge. Whereas the live analysis service gives you that ability, gives you real-time commentary, analysis, entry, exit, trade management, so on and so forth. Okay, so that hopefully on a 6 or 7 months basis, that should make a complete trader. Okay, it gives you the ability to control the emotions when you take a loss. You can keep your composure, so on and so forth. So these are all things that you have to take into consideration as a trader. Okay, so basically 60 minutes charts, like I said, given the fact that we have mini tapering, then obviously inverted head and shoulders fails. When you have a failed inverted head and shoulders, what happens? You have an emotive move in the opposite direction and you go lower. Okay, so we're going back to 6,400 if not lower. Okay, so that's basically the 10-minute chart. So 60-minute chart. Let's go to a 10-minute chart. 10-minute chart basically. Conclusion, we'll put this pivot high here, connect to the pivot high, and obviously that's been obedient. You're in a symmetrical wedge pattern now. You've got a H&S formation intraday. Watch out for that pattern to play out on the downside. H&S target is neckline is around 6,500. The head is around 6,530. So you're looking at unfilled gap is 6,490. So watch out for the unfilled gap. And then you've got 6,480 is a 200 MA, which is horizontal support over here. And then you've got previous resistance equals support here at 6,476. Previous resistance equals support again here at 6,465. And then obviously you've got support around the pivot S3 at 6,440, and that'll probably be the low if we do slide on the downside. Okay, we've filled the gap today in the morning. That's why I wanted to go long. We certainly filled the gap on the upside. We spiked higher. That created the head. Okay, and obviously this trend line here has been obedient. The market has held that. and obviously that's what we're looking at present. So unfilled gap below. Let me just put a little note there just to remind yourselves and myself. Okay, so we filled this gap, so I can get rid of this now. This gap has been filled. That certainly acted as resistance in the market, reversed. H&S formation at the moment, hence the reason why I'm short at present with subscribers, and basically we'll see what the outcome is there. Okay, and also one of the reasons why I went long yesterday as well is because the inverted the head and shoulders target was hit. When you have a head and shoulders target hit, you have a short squeeze and the market moves higher. Okay, right. Okay, folks, I think that summarizes it. Still always yawning, always tired. Okay, so yes, H&S formation, down we go. Unfilled gap here, 200 MA here. You know the support levels. Obviously, if this H&S fails, what happens? You have a short squeeze in the opposite direction. Then what happens? You go back and retest that resistance at 6520. You've got horizontal resistance up here at 6535. Yeah, 6535. We can test that level up there. Then obviously eventually you've got another level higher, which is at 6560. But obviously, if the fact that they don't do any taper at all, then you know exactly what's going to happen. It's the unfilled gap on the 60-minute chart, folks. Okay, it's that unfilled gap that will be broken. Inverted, this symmetrical wedge will break to the upside, and the markets will have one hell of a short squeeze rally. Okay, that sort of sums it up, to be honest. Okay, so watch out for that, folks. Okay, so let's have a look at our other variables and what are they telling us. So my commodity index saying that we had a topping tail and we had lower lows, lower highs. We've got key support level here. We break lower. Okay, so if commodities go lower, what do you think? What's that telling you? Tapering. Okay, mini tapering. That's basically what it's telling you at present. Okay, if you go to our Euro USD chart, what is that telling you? Let's have a look at the Euro USD. Here we go. So if you look at our Euro USD, we look at our weekly chart, and you can clearly see from the weekly chart that we put in a topping tail. You've got this trend line here. So it's telling you, what's it telling you? It's telling you that US dollar is going to be strong. What does that mean? Mini tapering. Okay. So these are all intermarket analysis variables that you have to take into consideration. So if you go to a daily chart here now, and let's have a look at a smaller micro view. Micro view, the Euro USD has held a double top. Markets failed to penetrate that. Mini tapering. Okay, mini tapering. If we go to our, let's just go to a 60-minute chart, see if we can pick up any clues from there. All I can see there is a H&S formation. Again, mini tapering. Okay, mini tapering. Why? Because the dollar is strong. Okay, so that's basically what we're observing right now. Okay, so keep an eye out for that, folks. Now, the other thing that we focus really on, and realistically, is you just look at the US dollar chart. Okay, and the US dollar chart will more or less tell you exactly what's going to come. Okay, so if I bring up the US dollar chart, what do you see in the US dollar chart? You see inverted head and shoulders formation. So if you have an inverted head and shoulders formation, what does that tell you? That tells you, and you've got 61% for fibrous support being held, and off we go to the races, okay, so keep an eye out for that. What does that tell you? Mini tapering. Why? Because the dollar is bullish and we've got an inverted head and shoulders, and look at that unfilled gap up there. Let me just put this correctly 1 second. I'm not sure why that's there. Unfilled gap here, there you go, 84.5, and boom 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 boom. Okay, up we go. Okie dokie, higher we go. Okay, so keep an eye out for that. Okay, so another variable that we can see, and this is, like I said, this is all part of the live analysis service. This is what I teach day in, day out. This is how I trade, etc, etc. Okay, let's have a look at the chart of the Nasdaq, because the Nasdaq is a chief, so remember that, folks. Your Nasdaq will always give you an advance warning signal. So the Nasdaq, what do we see here? We had a topping tail for the right shoulder. Okay, and had a H&S formation. H&S formation target is around 3384. Okay, so again, tapering, mini tapering. That's what it's telling you, mini tapering. Mini tapering. Okay, so keep an eye out for that, folks. So again, that's another variable that's aligning. It's not a coincidence, folks. This is intermarket analysis. Very, very important for you to study the works of John Murphy and the works of Lewis Mendelsohn. Even Anna Cooling to a certain extent as well. She's written a very good treatise and given a three-dimensional approach to forex trading. Very, very good book. Certainly read it. Educate yourself. Okay, so these are all variables that are coming into alignment. Okay, so I'll leave it at that, folks. Okay, so wish everybody obviously good trading and good luck for the move, and hope you play the move well for the FOMC move later on. as traders, all we can do is read between the lines and obviously take trades accordingly. I'm currently, like I said, almost 180 points for the week, so I can afford to risk a certain amount of points that I already have in the bag, and obviously look to magnify my profits, okay, and returns. And that's all part of the game. Okay, folks, so remember, taper on, taper off, risk on, risk off, wax on, wax off. Goodbye.